Good day, everyone. Wherever you're watching this video from, I hope you are having a good day and having a good time in trading. And if not, just hold on. Sooner or later, things should be better. My name is Njabulo, the owner of this channel that you're watching this video from. And I'm so happy, guys, that you chose to watch this video today, right now, whatever time it is that side. So all I want to say to you first is to say thank you so much for being a faithful member of the channel. If you already subscribed, and if you haven't, I would encourage you to subscribe, because there are some good things that's coming on the way. I said before that I will make more videos which are relevant to today's trading, because everything in life evolves, time evolves, and everything, it changes. So we cannot stick to one thing that we knew back in 1975 and want to apply it today. Some of things will not work, while some will work. So thank you so much, guys, and those who subscribed, I repeat, thank you. And if you haven't, please do subscribe so that you'll get notifications for the new videos. And let me not waste time. In today's video, as you can see here, is EURUSD. Why EURUSD? While I trade V75, strictly V75. So I want to show you something, that if ever you use the same concept and use it the same way, you will be profitable everywhere. What do I mean? I mean that if you trade one thing, just choose one thing. So I chose EURUSD today in currency pairs, because EURUSD is the most traded currency pair in the whole world in the forex market. So I think it will be relevant to a lot of people than V75, because V75 is restricted in some of the countries. They do not have V75. So I chose this currency pair today. I wanted to do something else that's different. So I do not look at these things at the currency pairs and oils. I don't look at oil anymore. I don't trade oil anymore. I don't trade gold anymore. So I'm strictly on V75 or anything synthetic. So with this, I hope it will help, guys. So I will do the top-down analysis in this video, and then I'll show you how to catch uh, the pips that you want every day, and I'll also show you how not to lose in the trading industry. That might sound contradicting, but I'm not contradicting myself. I just want to show you how not to lose in trading. This will only happen if you trade one thing. Just choose one thing and one strategy and die with it, if you're dying anytime soon. For some of us, God willingly, will live a long time, and then on your side as well. So guys, choose one thing, stick with it. Let me use that word, stick with it, rather than die with it. If ever you trade in currency pairs, trade currency pairs. If ever you want to trade in Nasdaq here, just go there and trade in Nasdaq and delete everything else, and then just stay with Nasdaq. If ever you want to trade currency pairs, just choose one thing. And then the way I trade, I do not watch news, because the setups already are there. Just that news follow the setups. I've said it before, and someone did not understand, but it's how things are. News will always follow your setups only if you did everything well. So with that said, let's start. Okay. As I said, I will do the top-down analysis, right? So I will start on a higher time frame, and then I think the lower time frame that I'll touch on will be M15. Maybe even M5 is possible. I'm not sure. So yeah, just keep on subscribing and keep on telling other people about this channel. So this is what we look for. Unfortunately, this is where my chart ends, but with that said, still I see something very good here. There's something I can use and you can use it as well. I think you see now that that USD has tested this empty zone here, like 1 2 3, yeah, 1 2 3 times, maybe 4 and 5. We'll see when we start them. But then why do we have euro USD here in this zone here? So now let's start with what you see on the left. What do we see on the left? We see, this is what I see on my side. I see price moved from this week here up until down here, and then after that it moved up all the way here. Let me start there for now. But in that still, what do we have? We have this bullish candle here. Before I highlight it, I want you to see it. We have a bullish candle here, and then we have price going down, and then after that we have price coming here, and then we do not have anything at all after that. So this is the beauty of a higher time frame. You have fewer things on the screen than a lot of things. So all right, so then what do we do then? Now I see a low here. This is exactly what I see, not what I predict, because in analyzing you have to mark what you see. You do not have to anticipate something. You have to mark exactly what's on the chart. So what do I see on the chart? I see this bullish candle. It starts here. I'm not sure what's happening on the far left. So this is all I see. There's a bullish candle that gave us a high. So this is a low, this is a high, and then we have a break of structure here, and then we have a lower low here. No, notice now then that I did not choose this as a lower low, and I did not choose this one here, and I did not choose this as a lower low, but I came all the way down here. So there is a reason why I choose that. The reason why I choose this low here as a lower low, because it's simply because I expect price to push and break this high here. However, if I choose this as a lower low here, and then it means that we're gonna have a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower, higher low, and then high, and then high. Okay, higher low, higher low, and then a higher high. So you just need 3 points to get a good setup. Okay, you just need 3 points only, and then what are those? You need this low, you need a high, and then you need a lower low, and then you need the break of this structure here. Basically this is all you need. All right, even in this is for the bullish move. All right, so for the bearish move, you need a high, and then you need a low, and then you need a lower low. Simple as that. As simple as that, guys. This is all we need in the market. But in order for us to take a trade here, we have to check first, do we have something down here? Because price might do a break and retest, and then same it might make a break and retest and then sell off. However, what do we have here and in between here? What do we have here and then in between here? So that is what we'll be looking at in this video. Please stay with me. This video might be a little bit longer, but I think it's worth it because I want to try and explain this, guys, to you for free. This is what I have a mentorship for. This is what I explain in my mentorship. So today, I don't know if we can say it's your lucky day or blessed day, whichever way you prefer. All right, let's come back to trading then. As I said, I see a low, I see a high, and then I see a lower low here. Again, you must remember that we in one chart we can have a normal low and we can have a strong low, and then we can have a normal high and a strong high. All right, we can have a weak low rather, and we can have a strong low, and then we can have a weak high, and we can have a strong high in one chart. I'll show you the examples of, well, of what I'm talking about. And this thing I did not check it since I did not trade the currency pairs. I did not pre-analyze this, so I'm doing this with you here. If it was Zoom, the people I trade with, they know at times I say just choose one thing and then we analyze it there and there. So why I do that? Simply because these things I practice them every day. I do them every day, so that's a form of practicing. So practice makes perfect. So let's start now. And then with this low here, we see that the structure got broken here. All right, so what we have a low, we have a high, and then we have a lower low here. I'm repeating this. So what then do we expect to happen after we have this low here? And then again, how do we confirm now that this is a low while we did not confirm that this is a low? Well, it's simple. Wherever we have a change of character, now that's where low will be formed. And then what is that change of character? Price was going down, and then we have we have a minor pullback, and then drop, minor pullback, a drop, and then and then a pullback, and the drop, and then this drop did not take out this previous high. So down here we had to look out for something interesting. And then what is that? Should price break below here and then break below this here, and then we will have known that on monthly time frame EURUSD is going down. However, where this low comes from, we have to mark it. Why do we mark it? Because if price breaks that high, then we know that we have a change of character. And where does this low come from? It comes from this high here. So what do? We mark this high here. Unfortunately, I'm not using the trading 245. Did I say trading 245 flip? The trading view, guys. Yeah, there's something I was looking at about that broken. It's just, yeah, something. Yeah, so you mark this high here, where price is coming from, that failed to take out what the previous high. So when price immediately breaks here, and then now you know that this is a change of character. And then how do you know that price broke here? You need to see a candle forming below the break and closing after the break, like a whole candle, not only a wick. Because with a wick it may be a stop hunt only. In fact, it is a stop hunt only. It is not a break of structure. So this is the break of structure. This is a full candle, and another candle was formed outside. This candle was formed after the candle that closed, that also broke the structure. So we confirm that this is a break of structure. So what do we have? We have a break and retest. As simple as that. And then why do we have a retest here while we still have the imbalance here and imbalance here and imbalance here? Why do we have the retest here? Well, it's simple. This is the last up move that failed to take out the previous move. Okay, let me just add this. This is the this here is the last up move that failed to take out this previous low, but also gave us a failure of market structure. So what then do we expect now? We expect price to come and break this very same um, high that was formed after this low. All right, this high that was formed after this low, and then when it breaks here, so this is this candle here, it's our point of interest. So what do we then wait for the break and retest, as you can see here how it happened. All right, I hope it's clear, guys. I hope it makes some sense. Okay, so but where then do we enter? Do we take our trades here or here or here or on this one here? Well, you might know by now that we have a macro structure and we have a micro structure or internal structure, whichever way do you prefer to use. So after this break of market structure here, do we have a microstructure or internal structure? Of course, we do have it. And where is that microstructure? Is this high here, this break here. Now, this is the microstructure here. I always say that 99% of the time, price is likely to retest the order block of the microstructure before the order block of the macro structure. All right, and again here we have an imbalance here and imbalance and imbalance here. So definitely here we were 100% sure that price will come and retest here. But how then do we get to here? How do we know that we have to hold price with this first touch and then price is going up? Well, unfortunately, that's for the mentorship. I can't reveal that now, guys. I'm sorry about that. Yeah, so okay, so then with that said, so where is the break of this structure that's started here? This now here is the break of the market structure here. This is the a break of the market structure here. All right, so this, okay, it has to touch here. I don't work with something like, I work with exactly what's there. So this is the break of this structure here. So then what do we now have? We have the most recent structure before the break of this overall structure. But you might ask yourself, I also said we have a microstructure here. So now I said we have uh, the most recent structure here. Well, this was a confirmation that EURUSD is now bullish. But then this is where the entry is. This is where the juice, inverted commas, the juice is at. And then what do we do then with that juice? And then we mark the break of that structure, and then where is the point of interest then if things are like this? The last up candle is our point of interest. Why is it the point of interest? Because this move comes from this low here. It formed a high, it formed a low, it failed to take out this previous low, and then which candle was responsible to push price to take this here? Was this last high here. And then after that, what happened? Price moved up to break the very same high that failed to take out the previous low. So that candle that got broken, it's our candle of interest or point of interest. So what then do we do? We do this, and then also I took the week only, and then that is known in the mentorship. Okay. So then, as you can see, after the break here, we have a retest here, and then with these weeks, we are not out of the trade at all. We are not out of the trade because the stop loss is far. We are still in the trade here. Then price pushed further away from this retest here, and then again, let's look. Let's investigate now. Why do we have this rejection here? All right, why do we have this rejection there? Remember guys, we are still on monthly time frame, so everything I'm doing here is on monthly time frame, and then you can do the same thing on any time frame of your choice. So why then do we have this strong low here? So now remember I said we have a weak low and a strong low. Why do we have this strong low here? Okay, and then why is this a strong low? Because it broke this structure here. All right, so if this low only broke this and this structure but failed to take out this structure, this will not be called a strong low. It will only be a low only, or a weak low if price comes down and violate this low. All right, so now we have this low here, and then we have a high, and then we have a low, and then we have a higher high again. But what made this low here? What did the market makers see that they will leave these weeks here? Well, when price was going up, then we look on the left. What do we have on the left? We have another structure here, and that is also on the left because we have microstructures on the left and microstructures on the right. They're all important. All of them are important. So, so in this microstructure or internal structure, depending on how you want to call it, what do we have? We have a low, and then we have a high, and then we have a lower low here. So, what then do we expect? We have a break of market structure here. So we know by now the rules of the order block. The last up candle after the price was broken down, it's our point of interest, and that's what expected to take entry. And then this is the last high here. Okay, this is the last high, and then we take it up to here, and then this is also explained in the mentorship. I'm sorry guys, I will not explain everything as in everything, but 99%. So this is the last up where we expected what? An entry for a sell. However, what then happened? We see with this candle a clear break of this structure. So what then does it mean? A normal order block, an original order block which get broken, it becomes a breaker block. If that was a bearish order block, now it becomes a bullish breaker block. What then do I mean with that? In accordance with this chart here, it means that we're supposed to sell here, but this order block got broken in a bullish direction. We're supposed to sell. Now it becomes a bullish breaker block. What then does it mean? It means we have to wait for price to come from wherever up it will go, and then when price gets here, we are going to buy. That's the meaning of the breaker block. And then now that is why we have these weak rejections here. And then remember, you do not now this I'll give you this for free. You do not remove the zone where you mark the order block until it gets violated. Pull it, drag it to the right hand side until you see where it gets broken or it gets respected. As simple as that. I just gave you something there for free guys. So now let's see then, if you just heard my last statement now, this is the meaning of that statement, exactly that statement now. So Now Euro USD just came out of this breakup, of this bullish breakup block now. But then what are we gonna do now if things are like this? Do we push price higher, or will price go down? If price will go down, where is the point of interest? There's something I always say on our Zoom calls, that whenever an order block is left somewhere, guys, keep in mind it will be respected. It's either today or tomorrow or next week, but keep in mind that order block will be respected. Now, this order block here was created uh, before the year 2000. Let me be sure. This was on the 1st of September 1999. That's where this order block was respected. The last born at home was born on the 19th of September of the same year, 1999. She was not yet born when this order block was created. Yeah. So look now, how many years later? 23 years later, the order block gets respected. Um, in in fact, 99 to 2014, I'm not sure how, to 2015. Yeah, I think it's 16 years. Yeah, I think it's 16 years, if not mistaken. Help me with calculations there. The first time this order block was respected was after 16 years on monthly time frame, and then the second time after 18 years, and then now 23 years later, price still came to the very same order block. Do not remove your order block zone. I just gave you a hint there, especially on a higher time frame. But then you might ask yourself, how then did we know that price will come here? Well, that's simple. You need to look for a change of character on the very same time frame. And then where is that change of character? Now, after this break here, we have a retest here, the first retest, and then we have a second retest here. No, notice now that this low breaks this structure here. That low breaks this structure here, and then after it broke this structure here, what do we have before the break of that structure? We have this imbalance here. I just used my fib to show you where the imbalance is. If you know how to mark your imbalance, so you see now that this is exactly where the imbalance is. And if you don't know, please refer to my previous videos. There's where I focus on imbalances. So after this break of market structure, and then we do have an internal structure on the left, and then we have an imbalance on the right. And then what does it mean? It means now then that the last down candle before the move that broke the structure, it's our strong low. This is a strong low. Why is it a strong low? Because it broke the structure. And then what then happens after that? You mark it, as you can see, this retest here, and then remember I said this is a strong low. So with a strong low, expect the first touch and the second touch before the structure gets broken. Again, I just gave you some hint there. So this is the first touch, this second touch. Again, look, the price came to I think this is 61. I think this is 38.2 here. Yeah, I think this is 38.2, and then here it came exactly at 50%. So those who trade with imbalances, then they knew that this was a killer entry here. at 50%. So they made some dollars here, some lot of dollars and a lot of pips here, just with this move from here up until here. But no, we are not discussing that. So this is a first touch, this is a second touch. Also, do not move this until it gets broken. I just gave you a hint again. I don't know how many are listening to that. And then let's see now. Now this strong low gets broken here. All right. So what does it mean then? The very same thing that happened here. This was an original order block. It became a breaker block. This was an original bearish order block. It became a bullish breaker block. The same thing here. This originally it's a bullish order block. As you can see, price tested it 1, 2, and then the third time it was broken. And then what then do we do after it get broken? And then when price broke this, where was it going to retest? Remember, we had this order block here, so this definitely was a point of interest. Then price had to come up and retest here. No matter what, price had to come up and retest here. But again, why with this week here? Why did not price come up all the way here? Well, let's look at where this order block starts. It starts at this is the open, no, this is the close of this last bearish candle. So any price from the close of the last bearish candle is an entry for our that trade. All right, this was an entry, and then again price came way to the point of interest again, second time. So I say to my colleagues on the other side that this is a buy to sell and sell to buy opportunity. All right, this is a buy to sell and sell to buy. But however, we cannot say this is a buy to sell and sell to buy and buy to sell and sell to buy and buy to, no. It's only buy to sell opportunity only. Take only 2 trades. I just gave you a hint again there. Take only two trades, buy here and sell here, and hold your trade. Okay, so price came to this order block here, and then after that it moved a little bit up. So here's an interesting part. Then this imbalance thing, we are done with it. Here is an interesting part. Then again we have this wick here, and then in fact you have this swing higher, and then again we have this swing higher. So there is a reason why we have a swing higher, and there is a reason why we have a swing low here. So but for time purposes I'll skip that. I will not explain that, but it is very important. So now we need to ask and answer ourselves this question: is EURUSD bearish or bullish right now? If I was in the Zoom, I was gonna be quiet until all of you guys answer that. But the question is EURUSD bullish or bearish now? If you understand the market structure and the order flow, then you know where the direction is. Since this will go on YouTube, please guys, let's communicate, let's talk about that on the comment section there. My comment section is always open. Is EURUSD bullish or bearish, and why do you say that? All right. I'll give you an answer, but I'll not give you a direct answer. You just have to listen to what I'll say from now on. So we have price in this bearish block, and then when price was going up, and then it broke this bearish order block, and then it gave us what, this swing high here. Before this swing high was formed here, what do we have? We have we have a break of market structure. And where's that break of market structure? It's here. All right, we have a break of market structure, and then again we have an internal structure. You look for internal structure immediately after the break of market structure, so I'll be just a little bit quick with that because I already explained it here. So this is a macro structure, this is a micro structure. So this is our point of interest number one. Yeah, all right. This is our point of interest number one. So as you can see, the break and retest exactly here. Again, the week only. The week only, we have a break and a retest here, and then price moved up. Notice now then that we have the imbalance. Let's only take one place of imbalance because I see two areas where there's an imbalance. But now we'll only take one area where there's an imbalance. Now, these imbalances, price need to come and fill these gaps. That's what market always do. They give you a hint that, hey, we are coming back. We are not done with you. We are coming back there. Just stay there. Wait for us there. And how do you see that? With this gap here? All right. And then after this gap, where will price go? The last down candle. Now this is an original order block. All right. So now the last down candle, where is it? Is this one here. And then when you pull our rectangle to our right, so about that, let's use a different color. So now this, it's this candle here, this zone here was our point of interest after we have this swing higher. So this imbalance was filled up until here, and then as you can see, we had a touch right at the top of the week here, the open of this bearish candle. We have the first touch, price moved up a little bit, and then it came to it, and then it moved up again, and then now it's currently touched here. So this candle hasn't been closed yet, so we don't know if price will move up or move down, but still notice now this high. Let's check if it took out this previous high. Then this high failed to take out this previous high. Yeah, all right. Let me make an arrow. This high failed to take out this previous high. So what does it mean then? It can only mean that we wait for wait for this move to trade below this, and then should it trade below this, where then is our point of interest? Our point of interest, then we go back to where, to the strong low. And where is that strong low? This is the strong low here. All right, I just added something I didn't want to. Yeah, this here, this candle is our strong low here. So what do I mean by that? I mean this here, should price give us a break and retest, and then it will come down here. Now this is where the real trading is. Our next point of interest is 0.88876 on EURUSD. Should we have a break and retest here? That is our next point of interest. I just gave you something there again. So so, so after that, what then do we have here? Okay. All right. I got disturbed with something, but it's fine. So all of these things, guys, happened on monthly time frame. So now I'll take you to weekly time frame. Or before we even get there, I can leave this chart as it is. I can leave this video. I can stop saying anything on this video here, because you have everything that you need to trade EURUSD next. But I'll be generous with you. Let's go to weekly time frame. Remember, there's still a question that is Euro USD bullish or bearish. So that question has not been answered yet. So let's get to this now here. We want to find out what's happening here. We're on weekly time frame. Remember, the change of character here is that one of bearish, right? So what do you look for? If you trade higher time frames, you look for bearish entries only. The only time where you had to look for buy opportunity was when price was respecting this point of interest there. That was the only time. Since then, it's strictly sell opportunities only. All right, so on weekly time frame, then we have to find out. I will not mark up, I will not do all the markups. So for the interest of time, not because there's something I want to skip on purpose here. For the interest of time, I'll just do one thing only, of which I think it might be a problem to a lot of people. Now, before this swing high was formed, there's something interesting I want to show you. Before this swing high was formed here, we have a break of market structure here. So by now we know that we have a break, and we were supposed to have a break and retest here. And why break and retest? Simply because this point of interest has not yet been tested. So we're definitely gonna have a break and retest here. And then where is that retest? So we are all happy. We know that this is the last down candle, so we move uh, our rectangle to here. So this is where the break of the market structure is at here. This is where the break of market structure is at. 1, 2, 3, 4 weeks. These are not break of market structures. This is just these are just top hands. Okay, these are not break of market structures. So the opening of this candle here confirmed that really this is the break of market structure. And then what do we do? Then we pull our rectangle to our right side, to our right hand side. So anything that will come inside this zone, then we take ourselves from there. Then if ever you are busy, you're doing something, you're studying or you're working, then you set your sell limit here, and then your take profit is just above here. Remember, we are on monthly time frame. Okay, so now let me show you the trick, guys, that the market is doing to many of you. In this break and retest of a higher time frame, there's usually an internal structure which might be just 5 or 6 candles. They might form an internal structure with about 5 or 6 candles, and then that internal structure is very important, very important. Why is it important? Because it minimizes your risk to ratio reward. The smaller time frame you go, and then the smaller the risk, but the reward is big. And then what do I mean by that? I just said this is a break of market structure, which is true, and then the opening of this candle confirms with everything that we have that here we will take an entry. But now look where this price was pushed into. Obviously they know that your pocket it's too little compared to what the big boys are having, the institutions. So if your stop loss is above this here, so you have to hold your price all the way from here. This is the entry, stop loss is just above here. You're not gonna make it at all. You're not gonna make it unless you are trading for the institution, but with your money you're not gonna make it. So what did they do here? This is the trick, guys. Just look at this. They made an internal structure here. I said with about 5 or 6 candles. Let's check. 1, 2, 3, 4, 5. Then the fifth candle broke the structure. So what does it mean then? It means then now we move our entry zone from here all the way up here. And why up here? Simply because this is the last down candle of this internal structure. Now this candle, it opened and closed. It did not yet trigger our sell limit until it has to wick up to trigger our sell limit, and then after that our stop loss will be just above this candle here. Just that this thing does not do not want to move to the right. The stop loss will be just above this candle here. So instead of you holding an entry from here, stop loss just above here, you lose your money. Just look out for these about 5 or 6 candles. So this is where the entry was triggered, and then if you go to a lower time frame, so you'll see why we have this week that's above the previous week. So that is why you need always to open your eyes like a hawk whenever you're trading, because that's where they make money with you. All right. From there, again, we have this reversal here. So we have a break and price did not retest here. So let me be generous one last time and show you why after this break here, price did not come and test it, and even this internal structure here. The reason why price did not come to retest this internal structure here and this macro structure, it's simply because these entries will be violated with price that will go down. And then why do I say so? I say so because EURUSD is bearish. And then again, why specifically the rejection here and here? Well, look now, after price respected this breakup block, we have a break of market structure here. And then again, if you want to understand why do I say this is a break of market structure but not this or this or this here, please refer to my previous videos. It's explained there. So after this break of market structure, what then do we have? We have an order block that will not be respected. With confidence, I say so. We have an order block that will not be respected. And then I don't think I'll ever make a video as simple as this, guys. I don't know what got into me. I just feel excited today, hence I'm giving you all these things for free. So we have an order block that will not be respected here. And why will this order block not be respected? Simply because it has been weak already before the structure got broken. This week here plays an important role. There's no random move in the market. There's absolutely no random move in the market. Every move counts. We can check all these weeks. All these weeks, they count. They matter a lot. So this order block was not gonna be respected. It was gonna be violated. Why? Price is coming from the point of interest. So hence we see this break and then retest where this is an original order block, but after the break it becomes what? A bullish breaker block. So this was the entry, and then after I explain this, I think you'll find on your own why we have this swing high here. And then the entry then to bearish here, it's simple, it's clear, everyone can see that. I don't have anything much to say because we have this break of market structure here. So we all know the break and retest, and then again we have a break of market structure here. So the break and retest again. We all know that by now. However, price did not come up here. So yeah, price touched there. Remember, on monthly, this is just a week on a bearish candle. All right. So on weekly, then things change now. All right, on weekly things change, and on weekly and on weekly, now we see that price did not touch this last down candle, but however price touched what? This candle here. And then why do I say that? This happened here. And then again, look at these 2 weeks here. You might think these are stop hands. These are not stop hands. Again, you have to minimize your risk, and then how do you do that? You measure your imbalance. Yeah, you measure your imbalance. Price will have to come and fill these imbalances, and then after price filled your imbalances, uh, where then will it go? It will go to the order block below or above that imbalance. So this is the order block below the imbalance here. So hence we have this. Price did not trade below our order block here. So it came exactly, it fit in perfect to our order block. I just said our order block if you are trading Euro USD. So now we'll go to daily time frame. All right, so I'll just do this. So all these markups are for monthly and weekly. So now we'll go on daily time frame. Again, we'll take everything from we'll take everything from something I want to say first before I say a lot of things that's unnecessary. So okay, so we will take from where the change of character starts, and then where is that change of character starts? Then it's from this high here, this high here. All right, so as long as price is in between this high and this low, so price we consider it to be bearish. There, I said it. As long as Euro USD it's in between let me put horizontal mark, 1.06360 and 1.23483. Euro USD is bearish. However, when Euro USD breaks here with a full candle, and then we see the change of character, and then after that we have to see one of these entry types here. One of these entry types for a sell, it will be this 1, 2, 3, 4, and 5. We have to see one of these entries, and then we'll consider Euro USD to be bearish after it broke here, and then give us one of those entries. Okay, so that's a PDF for the mentorship channel. Please do not bother yourself by asking it. Unfortunately, it won't be released to you. So with that said, I just said a mouthful there. I said whenever price is bearish, only look for a sell opportunities. And then in this instance, where do you expect a change of character at this moment, and then why we have a change of character, the change of character there, and then we have this break of market structure here. So as I said, there's no random move in the market. So this week was testing this last down candle here. Okay, so it came exactly, it just wicked it and pushed price further down. So on D1, how will you know that now Euro USD is bearish? We will know that is bullish, rather. We will know that Euro USD is bullish after it breaks this year. Let's see what was the price here. 1.14848. All right, we know that EURUSD is bullish after it broke 1.14848. And then what do we expect now? And then let's go to H4, right? We are now on H4, and then remember, we'll say on D1, we'll say that Euro USD is bullish after it breaks here. So we'll see the change of character up there. But in the meantime, we're on H4. So there's something called a trade time frame strategy, guys. We started on monthly, weekly, and daily. So we are now on H4. And then if you understand that, you know exactly what's gonna happen now. So not yet to discuss it anyway. So with the trade time frame strategy, now you know that you are still on the bearish move. So what do? You set a reminder to that order block that was respected before this last down move. That's what you should do. On daily, this is the last retest before price push down. However, we are now on H4. So the retest now, it's here. We have this retest here, which also you need some hawk eyes to see it. It's up here. So what the guys, I ran out of time. It's almost an hour now. My time to make this video was exactly an hour. So now it's 59 minutes 28 29 30 seconds. So I ran out of time. Unfortunately, I cannot continue from here due to other commitments, guys. So but set your reminder up until here so that when price pushes up to here, and then you wait for one of those entry patterns again, one of these. Definitely that's gonna happen. You wait for one of those, and then you switch to your entry time frame. I don't know what's your entry time frame. Let's say you use M30 as your entry time frame. Okay, I have to switch on my data, and I can't, because if I can switch on my data now, I'll be disturbed with a lot of things. So anyway, guys, this is where I will leave this video. This is where I will say goodbye to you. But thank you for your time, guys, and thank you for watching this video. It means a lot to me, and thank you to those who subscribed and those who refer others to subscribe. I appreciate your support, guys. Keep on subscribing. So everything that I did on monthly time frame, you can do it on H4 down, then you can be very profitable. So this is not how to lose money in trading. Follow the direction where the market is giving you. Just go that direction. Don't be aggressive, because if you become aggressive, your broker will also become aggressive with you. You'll be setting stop losses in all the places where the market left the liquidity. So you'll add those liquidity zones, so price will have so much appetite to come and grab it before it changes direction. So this is where I'll part short with you guys. Thank you so much. Thank you, thank you from the bottom of my heart. And with that said, do this only if you trade one thing, because if you trade a lot of things, you will not see all this. This needs patience. It can only be done when you trade only one thing. And once again, from the bottom of my heart, I'll say it in my language. Inkomu, guys, not cancer. Inkomu. I'm out. So please do feel free to say anything in the comment section. It's always open, and my Telegram link will be in the comment section there to talk to me about anything. So guys, once again, thank you. I'm out. Njabulo. Yeah.